What's going on, everybody? Blake here, Trade Tracer. As always, none of this is financial advice. Trade and invest at your own risk. This is take 2 of the original recording. We're going to go ahead and get it started. S&P pulled up here on a daily time frame, and we are in a downtrend, right? So the S&P is breaking below the 200-day simple moving average, which is a very important moving average for both investors and traders alike. And this is not the type of pattern that we want to see. We had a very short-lived 3-day uptrend. If you got in early above the 200-day on this uptrend, you had a couple days to get paid. And if you didn't put your stop at your entry after you scaled, this was very, very whippy. And, likely you're obviously probably out of the market by now if you're utilizing our methodology. No trends and downtrends, our priority is always preservation of capital. And what do we like to do? We like to put the odds of the trade in our favor. And right now, the odds are favoring the downside. So you never have to short a market to outperform, but you do need to protect that capital. And I always say the hardest trade to make is the patience trade. And that's the best trade right now. We don't have high probability trading setups to be swing long. We just don't. This is a market where we have a declining 50, a declining 20-day, and now we're closing below the 200-day moving average. So, I don't mean to sound super bearish, but, the reality of it is we are in a market right now that the Fed, the Fed is going to raise interest rates. And the saying goes, don't fight the Fed. And we definitely don't want to be fighting the Fed on this. And this type of market environment, when you have extreme inflation and raising interest rates, it's not the type of environment that's constructive for equities, especially growth equities. So the S&P does not look great. Be very, very cautious. Nasdaq looks even worse. Okay, the Nasdaq is bear flagging below this 200-day moving average, which is not a great technical setup, right? So you had a breakdown below the 200-day, rallied back into it, tested it twice, basically double topped at this 200-day moving average, and then just got destroyed, Friday, closing below this pivot low and closing in a downtrend. So of the indexes, the Nasdaq and also the small caps look just atrocious. Small caps look really, really weak. So if you're looking to short anything, I would be looking towards tech and small caps on the short side. Now, what are we doing right now? Well, the priority is preservation of capital. So hopefully you have cash on the sideline and you're being patient and you're waiting for that next uptrend. You're waiting until we have odds in our favor. And maybe that's next week, next month, next quarter. I don't know. But I do know that when we do get these uptrends, they're going to pay nicely because these counter trend rallies are going to be very aggressive. Until we can get back above this cloud, until we have price bull flagging above a 50-day moving average, I can't get too bullish the market right here. And I wish I could, but I just can't right now. So as you guys know, we are hedged heavily in our investment portfolio because we don't want to just be completely all in on equities when it's starting to look like it wants to roll over. So how do you protect that? Well, like I always say, you never have to short the market. That is one strategy, is to maybe get an inverse ETF. Not really my strategy. I always like to try to be long the market as much as I can and look for other sectors and other areas of the market that are leading. And right now, gold looks really good in the raising rate environment that we're in right now. Rate raising environment that we're in right now, commodities tend to do fairly well. So gold is something that we need to keep an eye on for a few different reasons. Number one, it's a hedge against equities, right? So that's one thing. Number two, it has a very positive setup. What I mean by that, we're breaking above the anchored VWAP from the all-time high. So this is the average volume weighted average price back from this all-time high, closed above it nice and strong on Friday, closed above the cloud, had price strength confirmation above the January high. So I do love gold, on multiple time frames, monthly, weekly, daily, it all looks great. You can see this massive cup and handle that's forming on the monthly. Weekly time frame is very nice pullback into some support and just, consolidation pattern. And obviously on the daily, this is a phenomenal swing trade setup. So I do like gold this week, probably one of the best setups. And, I don't really love the equities at this moment, but I do like gold. So keep a close eye on gold. As always, we got to take a look at crypto, what's going on with Bitcoin and Ethereum. Well, I said we needed to see price get in this range and close above here. And you can see we traded in this range, but we never got to close above. And right now, we're still below a 200-day, 50-day moving average. Here we have our death cross back here. Bitcoin is in a bear market. We've came down significantly, and it can continue to go lower. I need to see Bitcoin back above, ideally the 200-day moving average before I start getting, extremely aggressively long crypto. Obviously, you guys know I'm very bullish crypto long term, but right now is just not the right time to be, trying to really press the throttle. Same thing with Ethereum, a little bit weaker. You can see, we didn't even make it back to the 50, 0.5 retracement for the Fibonacci. Still below a 200-day moving average, still below a declining 50-day moving average. Once again, we need to see prices back above this 3,300 before I can start to feel a little bit better about crypto. And ideally, we got to get back above this 200-day. So right now, that 200-day is roughly around 3,600 on Ethereum. So keep a close eye on those levels. Once again, it's not a great long, it's not a great short here. It's kind of just a do nothing and a wait and see moment. So just to wrap up once again, the priority right now is preserving cash and waiting for the next uptrend. I hate to try to short the market, and I know a lot of people, are uber aggressive and they feel like they need to trade every single day. It's really difficult to be consistent in the long term, trading both the long and the short side, which is why we focus on the long side, because, markets historically like to go higher. And so we try to focus on the long side, and we get long in uptrends. And, it's easy street when we have, above the cloud, above a rising 50 and a 10-day moving average. This is easy street. These are easy uptrends. This is an easy uptrend here. And it's not going to be easy again until we can get back above this area. Okay, so until this happens, it's going to be difficult trading. All right, so just keep that in mind. Don't feel like you need to trade every single day, and have some patience, right? Have patience, have discipline, wait for the odds to be in your favor. And I know this week we're going to have, primarily short setups, because that's what the market's given us. This is the hand that we've been dealt, and we have to adjust. We have to trade in agreement with the market. Right now the market's pretty bearish, but we do have some bright spots like energy, gold, things like that. That's all I got for you guys this week. I'll see you on the open.